All right, let's jump into part two of the session here. Now that we've gotten through a bunch of the charting and gives us an idea of where we are on the day, let's jump into it. So first one we're going to look at here is our IRA. Pretty simple looking IRA. This is what we're doing currently in the IRA. I don't spend a lot of time here, so I think it's a good one to jump into, and we're going to keep an eye on where the markets are as well. So we did have a pretty nice bounce off of the lows of the day. We'll see what happens. We're getting close to the 50 EMA on the 15-minute. We'll see if the rally off these lows continues to hold or not. All right, so what do we have going on in the IRA? Here's a quick run through it. All right, we've got a strangle here on oil, which is perfect. We're at 108.65. We've had this thing on for 2 days. We're down, what, 5% or something on it, $80. No, not a big deal. But there's where we are on oil. So we've got one of these working presently. On ES, we've got all these things on ES. So let's go with the oldest ones first. We've got a September 29th long-term 112 that is just the put debit spread only. It's got a tiny bit of value in there, but not a whole lot. But we got 22 days. We'll let this work. This is, again, a reason why I don't like staggering my PDS at a shorter time frame. I think because if you do that and you're out of those PDSs quicker, I've got a free put debit spread going right now. Why close it? Why not let that thing run and give yourself the chance for some really nice money? It's a 50 wide, at this one at one contract. So yeah, $2,500. If we land in there, why give yourself any less chance of making $2,500 for free? So it's why I don't like to stagger the PDS at a different time frame. All right, so we've got an October one here. We're at 89% or 87% on the PDS, nothing to do. Another October one here, 74% profit, nothing to do. November one here at 47% profit, nothing to do. Another November one here at 27% profit, nothing to do, nothing to do, nothing to do. We've got this one coming up in 8 days. It's just a put debit spread. It's not going to be worth much of anything at some point. However, you're at 39.75. Can something happen in 8 days? It could, but why take it off? All right, and then the oldest two here are the December 15th and 29th one. December 15th, the naked puts are at almost 45% already in 17 days. And then on the most recent one, this trade's only 2 days old, and it's down a fraction. So nothing to really do here. All ES 112 trades. So really nothing to do here as well. And then we've got a gold strangle on that's at 36% profit in 9 days. Nothing to do here. So it's a pretty easy review of the IRA. That's it. We're up nicely on the year. Gains of, P&L according to the Tasty Trade here is up 34 grand on the year on a $2,000 or $200,000 account. I don't really put a whole lot of stock in Tasty Trades stuff, but anyway, that's about a 18% return on my IRA this year. And we took a distribution from this. So this IRA actually had a mandatory minimum required distribution happen already. So we took that out like 3 weeks ago. We took out almost $12,000, and we're back up to the exact same point we were 3 to 4 weeks ago. So we've made back the RMD on this account, not my account. I am not at the RMD level yet. How do I get each trade to display separately? If you're asking about how do I group these things, is that what you're asking, Billy? How am I getting the group and put these titles on? Okay. So yes, RMD, that's not my IRA I'm sharing here. I'm managing this IRA. And I deliberately moved this $200,000 IRA here just to trade in this portfolio to show you guys how I would trade it. So yeah, I'm not at the required minimum distribution level yet. So how do these work? This is a grouping. So normally this is what your account looks like here. You can grab any of the trades that you have, right click, go to group positions. I put in the name. I usually put in the date of expiration and what it is. And then I will click group, and voila, you've got a grouping. And you can group anything that you have and put them into their own particular groups. I don't always do it on strangles that there's only one thing on, but I do like to group them. It gives me a chance to see what everything looks like and organizes it really nice. So good feature that Tasty Trade finally came out with on the desktop version here. All right, so there's the IRA. Let's look now at the small account. So here's the small account. We started this account with about $10,000. It's up $2,800 for the year, so that's not too shabby on roughly $10,000. So it's up about, I think it was closer to, it was over 10 because we started it last October, November, so it was more like 11 or something. But yeah, we're up almost 20% on the small account for the year. And what do we got working in here? Well, we've got a strangle, and this is a low delta strangle because from a buying power standpoint, I have to be pretty careful in this account not to overdo size and buying power in this particular account. So in a small account, it's tougher. You've got to really, do what you got to do on this, but it's a lower delta strangle. This thing's at 16% in 22 days, nothing to do. The rest of this is pretty basic. There is a 112 for September, just the PDS is all that's left. We can only do one a month. I'm doing 2 contracts, which is 4 naked puts and 2 put debit spreads. So that's the size I'm doing now. But because of that size, I can't do them twice a month like I'm doing in the larger accounts. I can only do one. So every month there's only, and MES doesn't have the same amount of strikes. And so here's one in October. It's got a 86% naked put, nothing to do. November one's at 47%, nothing to do. And the December one's at 41%, nothing to do. So pretty quick, done on this. Now you will notice there are 2 other trades in this account. I've been posting these. I've been doing these 90 DTE 5 delta naked puts. I've been putting them on 2 at a time. And it's been adding a little bit of extra income to this account because I really can't do a whole lot of anything else in this account. These 112s are taking up most of my buying power. I throw on a low delta strangle. That's about all I can afford to do. But these trades don't take up a lot for me here. So they give me they give me some theta, and they've been doing pretty well. Takes a little while for some of them to come off. But, you're up 16% on one of them after 9 days, and I'm down on the one from 2 days ago. Hey, timing is everything. Just let it go. I got 90 days to be right, so I'm not too worried about it. Now, right now, my buying power on here is about 59% because of the drop over the last couple of days. Because of that, I'm not doing anything else, so not adding any more of these because I can't. There's no more buying power is telling me, nope, can't do anything. We're at the December long-term 112. So one thing I would take a look at would be, where's the next one? So January is going to be 134 days. I've got 14 more days. I've got to get that buying power down, but I got 14 more days before I will jump into this into the January as a 112. So nothing to do here. We don't have the buying power to add anyway. Hey, we're down a whole $10 today. No big deal. And then up here, this is where I grab my daily, info from. this is a 2 delta, 37 theta account, and BP is around 59% as of this morning. So it's a little elevated, but we've been selling off a bit and the markets are down today. All right, then we look at the main income navigator trading account today. Let's take a look at where we are. And this is the thing that drives me crazy on Tastyworks, because I can change my BP by over 10% in the next 30 seconds. But you can see, yeah, we're down a bit today, not really that big of a deal. Deltas are pretty negative, but that's because there is a 0 DTE trade working here today. So these are a little bit goofy right now, and that's also goofing up my buying power on this trade. So we'll ignore that for now, because 0 DTE will play havoc with your buying power. All right, let's look at 6A. So Aussie dollar, when we looked at it a bit now, we see that we're at kind of a low in that account. So if we had the buying power to do something, would we? Right now, no. So right now I'm not doing anything here, but on 6A, I do have, and we talked about it, somebody brought up, can you put a 112 on? Well, I did 10 days ago. So here's a 112 that we put in on in this account, and it's up nicely. I think the 60% is crazy. I don't have any idea here, but you can see it's not up 60%, but we are up $300 on it. So we'll take that right now, but nothing to do on this new 112 on the Aussie dollar. And then we have this strangle working with all the selling. This is 48 days old, so it's getting to be a pretty long in the tooth. This is like dog years for strangles. If my strangles get past 30 days, they're starting to get pretty old. And this is 48 days in. We're only down 30%. Any bounce in 6A is going to immediately crank this strangle up quickly, change the overall outlook of this strangle very, very quickly. So we'll be watching to see if we get any kind of a bounce in 6A. But considering how far down it is and how it's been performing and how the dollar's strong, being down 29% or 30%, it's really not crazy. The 68 days or 48 days is pretty old on a strangle. We'll let that go. So I got a 112 and a strangle, nothing to do on 6A. We'll take a look at 6E, which is the Euro futures, which have looked absolutely horrendous. So as we're looking at the Euro futures here, they've been down. This strangle is down 88%. It's not doing great, but we're nowhere near any kind of a panic level. We looked at the charts. We still have a ways to go on this before we have to look at something. But 105, we're at 1.07, 1.05, which maybe it sounds close, but when we looked at the chart, there's some decent room to fall. And I think we would have to break through like the 3 ATR on the Keltner channel. So there's some stuff that we have to hit before we can do that. So nothing to do here. It's down. I don't care. All right, we take a look at oil. So here's an oil strangle. This one's been on for 10 days with oil running higher. It's under a tad bit of pressure. It's down 21%. I can go up to 100 on this one. I'm not really too worried about it. We're only 10% in on oil that is overdone short term. All right, let's take a look at the next oil, which is the remainder of a 112. This is the put debit spread from a former 112. It's not looking too likely right now, but yeah, can oil drop 20 points in 8 days? Well, probably not, but we're going to hang on to it. Again, this is why I don't stagger my put debit spreads. I just prefer to have this nice little, very small negative delta position here, just to have it on. Another 112 in oil. This one's up nicely. We got the put debit spread up about 83% so far. This is 38 days into a 78-day trade, looks like. So with 40 days remaining, there's really nothing to do here. You just let this thing sail along. We're up $480. Maybe if this thing closes out and we'll book some nice gains on that one, and we'll see what happens. And then we'll have some free put debit spreads. Now, these are a little bit higher. Can we get to 74, 72 in 40 days? Maybe. That might be interesting. We'll keep an eye on that. All right, and then we have one more oil trade. So we have 4 different futures expirations running here. 2 strangles, 2 112s. So again, I'm spread out over time on these things. So here's a strangle. This strangle's 28 days, and this strangle's up 37%. So where's the other strangle? So we've got one strangle that we've been in for 10 days, down 20%, 21%, and we've got this one, 28 days old, that's up 37%. So you just gotta let them, chill. But 37%, doing nice, nothing to do here, nothing to see. All right, ES. Now we are spread over 3 ES futures expirations. Let's start with the most recent. We get to actually do it, put a trade on in here today. So the current expiration is this one here. Let's close everything so we don't get confusing. We've got 2 of our 14 DTE hedges. One is expiring today. It's going to expire for a whopping nothing. I mean, I could take technically, what, $3.50 out of this. So this one's going to expire today. And then we've got another one that expires in 6 days. Well, I want to add another one today. These I've been putting on for about $1.50 times 2 contracts. So if I wanted to do that, I would go out 14 days. That $1.50 again gives me something around the 2 delta, and it's around a 10% drop from here, which is, I picked it for a couple of reasons. The 10% drop may, being one of them, but 10% down from here is going to put me, at roughly 40 or so. So I'm pretty close to a 10% drop in this trade. I would look to put this trade on today. So we'll send it. We'll see what happens. If I'm looking at this trade and doing some analysis on it, let's take a look at the one. Now we got to redo that. Give me a second here. Now it's going to be in another expiration somewhere. All right, it's down here. So if you take a look at this one, again, 10% down, we'll let this thing waffle a bit. We'll see what happens. If we have to move the strikes, we will. I'm not super concerned. But if we get a 10% drop in these, you are going to make a pretty nice return on it. And I found doing 2 at the $1.50 level was better than 1 at the $3 level. It's going to give you a better bang for your buck. And when you take a look at, here's overall the ES positions at this particular expiration. What would you think would happen if we dropped down to 4,000 or 40.50 in here? This is going to be worth like $48,000, $50,000. I kind of like this looking elephant right now. Here. So if we drop into here, man, look how fat and nice this is. You think I'm super worried about a 5 to 10 or more percent pullback? Not really. I think it would be awesome, frankly. But let's take a quick look at some of the other things we have on. Can't use this expiration either. Tasty trade and their stupid analysis. This is why you have to buy one, people. And you can get it at the crazy discount low British pound price today. All right, let's take a look here. All right, I can at least look at this one. And get yourself one so you're not looking at these bad looking charts. But this is where one trade after a week looks with one of these hedges. So we're here at 44.60. If we drop down 10%-ish or so, right now we're looking at about $10,000, $12,000 if we in gains, and this is after it's been on for a week. So we'll see what happens, but we'll be adding more to this. The new ones, if we dropped any further than that, they really start to add up pretty nicely. But a 10% drop would put about 10 grand in our pocket just from this one alone, and we're looking at probably closer to 40 grand once both of them are on. If we get filled today, I'll show you what they both look like. here. All right, let's move off of the hedges. We got one working. We'll see what happens. We've got a December long-term 112. It's only been on 7 days. Not much to look at there. We've got the remaining PDS that expires in 8 days for September here. It's pretty far away. Could happen. And then what else we got? We've got another PDS in September. We've already taken the naked puts off of. So there's another freebie. This one, though, if we drop 10% in 22 days, has some opportunity. Doesn't mean, and if we drop 5% in those days, it might have some opportunity as well. We've got an October one on. It's at 87%, nothing to do. Another October one at 73%, nothing to do. We've got a November 17th on, 47% up, nothing to do. Another one here, 28% up in November. Then we've got the first one of December here, which is the 15th, which is when that futures expiration happens, because then the other December is sitting up in here in another futures expiration. But nothing to do on this as well. It's up 42%. So nothing to do on the 112s, nothing to take off. Now we do have a strangle on. We have 2 of them. This strangle's up 22% in 10 days. This strangle's down 1% in 7 days. Market timing, just let them go. And then we do have this beautiful trade that we made 2 days ago where we did the same type of strategy with the 90 DTE 5 delta. It happened to have dropped about 20% now in 2 days. Market's down 2 days in a row decently. So we'll just let this thing play out. Nothing to do there for right now. So there's ES. In gold, what do we got working? We've got 2 strangles in gold working. I'm not at a buying power level where I can actually put something on. So right now there's nothing to do. Could we put more on if we wanted? Let's take a quick look. This is how we manage the account. So right now, anyway, this one's up 12% in 6 days. This one's up 40% in 10 days. So they were put on close together, but they are at 2 different expirations. They're over 20 days apart on these. This one's out at 110 days up here that we just put on more recently. If I was to put another gold strangle on today, because maybe my buying power would allow it, I'd probably still look at the 110. I'd go down and take a look. If I put on a 7 delta, it's so close to this one at 1800. And if I went up to 6-ish or so here, 2230. Now that's 40 points off, but this one, far end one down here is only 10 points. To me, it would be a no-go. Too close. I wouldn't put it on, even if I had the money to do it. I'm not trading it. So gold, we're in good shape on both gold strangles. They're doing very well. RTY, we talked about this earlier with the charting part of the show, and RTY, or the Russell, right in the middle of the trading range that it's been in. We are 200 points above and below that channel on RTY. I like it here. I think it's a great strangle opportunity, and we're up almost 11% now. Sorry about that. Up 11% in 9 days. So pretty good there. Not much of anything has to be done on that. Apple, total dog. Here's a leap. It's down $300. Who cares? But 45 days. Apple's gone nowhere. Nothing to do here on Apple. You just let this leap run. It's at 150. If we get there, I'll either roll it or I'll take assignment. Would you like to own Apple at 150? Maybe. Not a bad play, and then I can wheel it from there. We'll skip Bill, come back to it. Enphase, this one's also down 55%. Two ugly looking leap trades. Nothing to do here right now. Enphase just meandering around. Neo, we did put a butterfly trade on. This thing's down, $50. Nothing. I got 15 days on this butterfly. The max I'm going to lose here is about $117 or so. So not too worried about that. We're at a 50% loss. If it goes to 0, then I lose $100. If it goes up, Okay, now I have a chance of $600 or so. So pretty nice upside. I'm just going to leave NEO running. And then SPY, we'll take a look at SPY, and then we'll jump back to SPX here in a minute. All right, SPY, these are 3 leaps. One's dead flat after 52 days. And then another one's basically dead flat after 45 days. And then this one's down $50 after 38 days. Because my deltas are a bit positive on this drop, I don't want to add positive delta. I'm not adding more SPY leaps. Even though it's maybe a core type of position, I can't because my BP is maxed anyway for my trading. But if it wasn't maxed, I would not want to add more positive delta in here. Ignore the 131 today. So I'm not doing anything on SPY because I'm managing an overall portfolio, not individual positions. All right, SPX. We do have a call credit spread on right now. This thing's down $100, $144 on the day, $120 on the day. It's getting better as we talk. I don't know that Apple is going to, or NVIDIA is going to reverse themselves on the day today and take this market higher. We tried to do some recovering, but if you're really looking at where we are, Tesla's down 2%, Apple's down 3%, NVIDIA's down 3%. With Apple, Tesla, and NVIDIA down 2 to 3%, is this market going to be roaring higher today? No need to pop the answer in chat. I'll answer for you. And right now, I don't think so. It doesn't mean it can't. Okay. It doesn't mean we can't go green on the day, but I'm playing the downside on it, and we'll just see what happens. On this one, we've already won a trade today because we already put on the put spread when the chart showed where you were. So we already put that on for 40 cents, took it off at 20 cents, made $160 on that trade. We're done with that one. We'll see what happens on SPX here. All right, and then last one is Bill. We have 2,500 shares of BIL, which is the T-bill 1 to 3 month ETF. I'm putting 20% of my buying power into this. So you can see here the capital requirement is 57,200. Okay, so 57,200 is roughly 20% of my net lick or so. So with my net lick is, it's at like 290 right now. So 290, 20% of that is 58,000. I'm at 57,000. Nice round 2,500. 20% of my net lick is in Bill. Now, it allows me to control $228,000 dollars worth and 2,500 shares worth of Bill. Now, at 228,850, assuming that this gets a something closed, assuming this gets a 500 and I'm sorry, 5% or 5.15%. I think that's where it is now. Ed, you may know, you can pop it in chat, but isn't it like 5.15? The yield right now, I believe 5.38, even better. I'm going to stick with 5.15 because it's conservative, but no, let's not, because who wants to be conservative? Because that's not fun. 228, 837, okay, at 538 is $12,311 a year, which is $1,000 a month. So I should be expecting a check every single month. I don't know where my check is for this month, but it should be, it went ex-dividend already, but I have not seen the money end up anywhere. But I should be getting $1,000. Yeah, should hit today. So yeah, I'm looking for $1,000 in cash today while I wait. $1,000. Okay, I'm making $12,311 in dividends on $57,209, right? So 12,311 divided by 57,209, and boom, that is a 21.5% return on the year. So suck on that, market. So Bill is going to be paying me while I'm in this particular trade. So this is what I'm doing. I'm maxed out. I'm not adding any more to bill because I don't want my cash going negative, because I don't want to pay margin interest on this. But I'm in pretty good shape. When I take a look at this, my cash is over 100,000 still in this account, and I have that 228 on bill. So I'm in pretty good shape. If I would add another 10%, I'm going to be right on that threshold of most likely paying some margin interest, which is pretty nasty with Tasty Trade, which a lot of people are finding out right now. They went too high on BIL and then woke up and looked at their account and found some significant margin interest that pretty much wiped out the benefit. So you got to be careful how much you put in there. I don't want to do more than this anyway, because as I'm trading and as I'm looking, ooh, we got filled on that ES trade. So we did get into this ES trade. Now the market's moving higher. I'm probably going to get stopped out on this call credit spread. So we'll keep an eye on it, which is fine, because the higher the market goes, the better we're going to do today. So I'm okay losing on that trade if the market moves higher. So the ES hedge, we entered it here. So that hedge is on. I would normally go right back to my, it's sitting here. So I'm going to group this one because it's in a different strike. And I'm going to change it from word option there to 14 DTE hedge. Boom. It's in there now, so that I can track that hedge separately, and we'll let that work. This one's going to come off today. So you only get the grouping option on this desktop version, not on the browser version, I believe. So, but on the browser version, you had that ability before. So who knows? Anyway, there's where we are. We ran through everything. This SPX trade down here, we'll keep an eye on it. The market is climbing significantly right now. So we have broken through the 50, and we're moving higher. I'm going to wrap up here in just a moment with you guys. But let's take one last look at the day trading screen. We got into that put spread right here around 10 o'clock when everything reversed on the 15-minute, which is where I like to. So coming off of oversold levels on the 15, you can see reversal here on the 1 hour. Perfect opportunity. When the 15 says we're reversing, that's when I'm going to get in the best opportunity here when we're down. And 10:15 is where I got into here on this little bit of a pullback here. Exactly the exact time of that trade was 10:12:30. So right here on this down candle below the 21, this is when I got, which is when I put on the put credit spread 0 DTE, and we put it on about 5 delta, 20 wide, and it's already been closed. Now we'll keep an eye to see, do we get tested up here on our call credit spread, which is way up here at 44.70 up here. So this is where we are. We'll keep that thing up on our screen, gives us a chance to watch where it is. But right now, I'm not really doing a whole lot of anything except letting this play out. Stair stepping higher, stacked looking good on the 3-minute, and we're moving higher, but we are getting into some overbought territory on the stochastic momentum, but momentum is still up. So we could see some more upward momentum, but the momentum may be coming out here. We'll see on the 3 minutes. So right now, we just play it as we see it. You can keep playing these up and down. And if I was scalping ES, I would be doing the exact same thing. My trigger to scalp is, what's the 15-minute telling me? I like to do the reversals, not necessarily the breakouts. I think Gabe is more of a breakout trader. I'm more of a reversal trader. Reversals are good because I'm used to premium selling, which to me, reversals are best for premium selling. For buying, breakouts are probably better, which is why Gabe would be buying. I don't want to talk for him, but which is why he would be buying ES at certain levels when it breaks above certain levels or breaks out. He's looking at those levels. I'm looking more for reversals and trying to get the quick hit by selling above or below. But if I'm trading ES, I'm kind of in a similar boat. I'm watching things happen. So no, I'm not thinking of any LT112s today. We're too far away. There's nothing to put on. We're already maxed. Our buying power's at its max right now. There's really nothing we can do. My buying power is at 76.7 right now, minus 20% for Bill. It's at 56.7. Boof, I'm right at my 50 almost on a down day. And I've got that call credit spread working right now. So as soon as that comes off, I'll probably be right back around 50, but there's no reason to do it. How did I monitor my cash position in Tracy trade? I look at the balance tab. I don't know how accurate that is. Ed maybe can comment on that here as well. I only have about 5 more minutes here, but Ed, I don't know if you want to, is my it's not. Yeah, Ed, so I'm looking at that as a general idea of, do I have enough cash according to Tasty Trade using the balance tab? Again, is it right? I don't know. But I'm giving it like a giant wiggle room problem. As long as it's positive by a decent amount, I'm not too worried. Yeah, Ed.
Hey, Tom. Hey, everybody. Yeah, I would suggest that everyone also open an Apex login.
Yeah.
And let me post that link right here in your section. And that, you can look at your BAL, and that's great. But there's a delay because the futures are T+2, meaning they move the money back and forth. So when you have constant activity going on in your account, buying, selling, blah, 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 there's all this back and forth activity that's crossing over each other, and it's kind of hard to get a settled balance. So your BAL balance on your platform itself is not always accurate. I just did post that Apex login, how to do it at Tasty. Once you create that, you can create a page that will show you what Apex sees. Apex is the clearing firm for the equity and index options at Tasty, as well as your actual trades. Anything but futures trades through settles through Apex. And you're able, there you go. You're able to create your logon there and log in and look at it as well. There's a section there called balances. And under that, there's a trade and settled balance. And if that number matches your platform BAL number, then everything is settled. If it does not match, there's still some back and forth going on. And the BAL is not the number. The number in Apex is closer to the number. Even the Apex number is not the number necessarily, because Tasty uses Stone Co. for their futures and futures option clearing, which is another sub-account that we don't have access to. So there's a little bit of black box going on there. And that's what makes this extra confusing when you're trading futures and trading heavy BP % of futures. There's a lot of stuff going on under the surface. It's very hard to allocate. I think you're tweaking it down very well here. As you said, you may be pushing it to the edge. Sometimes when you push it to the edge, we burn our fingertips because we've over allocated, and we get some margin charge because we've tried to figure out exactly how far we can go. So I like your edge in thing. Edge in. I think you did, and your verbiage, your vernacular is a little different. But I look at like total net lick, and then if you're 50% usage typical buying power, you have 50% sitting there in cash. If you're an all options and futures account, start at 10% and see how that settles into your account after a couple of days, and then just keep adding a little bit until you're at a comfort. You're basically pushing it right up to the edge where you don't want to incur margin interest. I don't want to ramble too long. Everyone knows I'm capable of it, but there are a lot of people who are misconstruing this and way over allocating. You can only use your cash once. You can use the buying power off that cash, but you have to be careful that you don't over borrow based on what they say amount to withdraw. That's the full amount you can withdraw while incurring a margin loan. You don't want your cash to go negative. If your cash goes negative under BAL, or your cash goes negative under your Apex account, you are paying margin interest. So please be aware, you cannot buy $100,000 worth of BIL and then have 75% freed up and continue buying more and more BIL, resulting in a 4x notional allocation of BIL into your account. It's overdone. You can only use your cash once. Don't even use your cash once in BIL or the T-bills, because you need some cash for your futures activity. If you're not trading futures, you're trading all index options and equity options, you can basically invest all of your cash into there. And as you sell additional puts, et cetera, it creates a cash balance that's above and beyond your original cash balance. It'll give you some cushion. All very complex. I'll stop talking. There's a lot of activity going on in the fixed income room. I'm also having a session next Tuesday at 1:30, which will be live and recorded. I welcome all questions for that. So I'll stop. Thank you for the time, Tom, and thank you for allowing me to roll this out.
Thank you, sir. So yeah, a good little ad there too. So Ed, we'll be doing a live session coming up. So if you haven't been into the fixed income room here, check that out. Ed will keep posting info about that when that's coming up. But if you're on Tasty, then Apex is where you want to go. If you're on Toss, you've got a whole nother piece. However, I'll go back to my balance tab that I just went to with you guys, because I look at that balance tab on a very frequent basis, like daily. So I look at that daily. They'll also tell you if you've got margin interest about to hit in that balance tab. I've never seen that on mine, but other people will see that. But I know where my balance is almost every day. So even though it may be not 100% accurate, I know that I'm always around that same number, because I slowly legged into this 20%. So I went 10%, then I went to 15, then I went to 20 over a period of time, and I'm done. I'm at 20% of my net lick, or my buying power usage here is in BIL. That's where I'm staying. I am adding no more to it, but I'm very comfortable with exactly what my balance is. But you guys can check it. So if you've added more, and smaller accounts, I don't want to make this a fixed income thing. Smaller accounts can be affected a lot more than larger accounts, depending on your allocations. So you got to be very careful in a small account of adding too much bill. I know some people with a 20% allocation that got margin interest. So we're charged margin interest. So you've got to be a little bit careful with what you're doing. That's enough on that. I got to run. I've got another session here at noon today, but this will be recorded in 2 sessions. One before my internet bumped me off, which is the charting part, and then the second one, which is all the meat here of reviewing our 3 portfolios. I hope that was helpful to you guys. And if you want more on fixed income stuff, check out Ed in the fixed income room on the Discord. If you guys have any questions on anything else, hit me up in Discord in the main chat, and we'll see you guys there. Hopefully this was helpful. Have a fantastic day, everybody. Take care.